Hello, everyone. Another episode of StableSchool podcast, live from Cannes. I'm your host, Raza, head of growth at Scroll, and I'm here with Markus from Mento Labs.
Hey, great to meet you. Great to sit here with you in beautiful Cannes. Thanks so much for hosting me.
Yeah, excited to have you here. Like we just, told you, I've been reading about Mento Labs. I'm actually really excited for you to be here. So please do an introduction of yourself and then tell me more about Mento Labs.
Absolutely. Happy to give you some background on me as well. So I've been working for the past 7 years in the Web3 space, always actually with a focus on stablecoins. I was part of the early team working on Celo and was basically working on all the stablecoins on Celo. And with Mento, we are a spin-off of the stablecoin team and now actually going multi-chain with Mento with a focus on FX. My background, I'm an economist, so studied economics, did a PhD in monetary economics, worked for different universities, postdoc researcher at the University of Munich, at the Columbia Business School in New York, briefly also at HKUST in Hong Kong, and then worked in different parts of the traditional finance world as an investment banker for JP Morgan and Merrill Lynch, and also as an asset manager managing pension fund money in the end for large pension funds.
Well, yeah, I'm very, very familiar in the retirement world. I started my career in actuarial services with Aon Hewitt.
Yes.
And so I don't hear that often, so that's already cool hearing that. I think that we need more TradFi people into the space.
Should we directly go on a sidetrack and talk about asset management and pension fund investments and how we get all of this into Web3?
That's the goal.
Yes.
I remember first time hearing about actuarial services, I'm like, what is it? And whole world, very, very important. But more importantly, tell me about Mento Labs.
Yes, absolutely. So Mento Labs is the on-chain FX platform. I've mentioned that we are a spin-off. We actually started to work on stablecoins. So we have by now actually 15 different stablecoins live. All the G7 currencies, which means a dollar, a euro, a Japanese yen, a British pound, a Swiss franc. But beyond those G7 currencies, we also have more exotic currencies like a Kenyan shilling, a Philippine peso, a Colombian peso, Brazilian real, and so on. And we can also integrate other stable coins. And once we now decided to go cross-chain, to go to major other networks, we actually found out that many other networks are missing stable coins, but what is much more important, what they are missing, is actually proper FX infrastructure. In the Web3 world, we don't see a lot of institutional type trading because actually the base layer of FX infrastructure is missing. And in the end, this is what we are now bringing to all of these networks. We're bringing FX infrastructure. FX infrastructure means enabling users that they can swap at the FX rate from a Japanese yen into a euro, from a euro into a British pound, and to a dollar.
Just to interrupt you, sorry, because I'm already bursting with questions. But does that mean Forex traders?
Yes.
They would have the same experience from a centralized exchange or a platform on chain now?
Yes. And this is in the end a huge user group that we actually would like to bring on chain. The Bank for International Settlements estimates Forex trading to be at $7.5 trillion a day. It's by far the largest market in the world.
I have 2 people in my family that are full-time Forex traders.
Amazing. So you know the game, and certainly your family knows the game. It's the largest market in the world, and there's huge volumes going between these, for example, these G7 currencies, huge volumes in the euro to dollar market or in the pound to yen market, but also huge volumes in many other or in every other also emerging market, in young economies and so on. And now it is the largest market in the world, but it's actually not 24/7. It's only open 5 days a week. It is not running on the same infrastructure, so it actually benefits a lot from Web3 infrastructure that could be basically a common railway for these markets. And in many, many markets in the world, there is actually no direct FX pairs. So let's do an example. If you're, for example, in Kenya and you're working, have a business and you're working with Ghana, then there's no direct Kenyan shilling to Ghanaian cedi market.
No.
It just does not exist.
I was recently in Nairobi,
Yes.
And I went to Lagos a few months ago to really like talk to the people on the ground, different banks, OTCs, exactly underlying the problem you're mentioning.
Perfect. So also there, you know what I'm talking about. It's a huge problem there that you can't, for example, easily exchange a Kenyan shilling for a Ghanaian cedi, because when you want to do business between Kenya and Ghana, for example, then you maybe need to hedge your currency exposure, or you just maybe need to simply swap from one currency to the other. If you want to swap from one currency to the other, you have to go always via the dollar. So you have to go from Kenyan shilling to the dollar. That is a T+2 settlement trade. And then you have to go from the dollar to the Ghanaian cedi. That is another T+2 settlement
Plus
trade.
fees.
Plus fees. And then maybe there's a weekend in between. So it takes more than 5 days to actually go from one currency to the other. And Web3 is the perfect infrastructure actually to make this, or to bring this to instant settlement, to make this much cheaper, to make this also much more accessible. So for me, Forex or FX or foreign exchange is not only as a fact the largest market in the world. For me, it's also the perfect market to bring on-chain in the end. And that's our goal at Mento.
Yeah, a couple of ways I want to go with this. But and by the way, to add to your point, there are a multitude of reasons, but also when you talk about exposure, with a lot of these currencies, they want to hold the right amount and not too much and not too little. And so too little also means like you have to go through that process again. You know, business suffers. Too much means you're inflating your own wealth. Also, not something they're really waiting for. So I think that this is a huge issue. And I remember talking last year to a couple of friends of mine from the TradFi space. I think that the two biggest opportunities are not just Forex, but also tokenizing stocks and commodities and making those more accessible. But definitely Forex in terms of volume is absolutely immense. One side tangent, I promised you tangent, so I'm going to give you one now. Obviously, the opening and closing in markets actually gives opportunities to Forex traders.
Yes.
Are you not taking away these opportunities now?
In some way, yes. It's also, I think, it is, I would say, what we're now doing is on-chain, we are able to open up new types of markets. So traders can engage in other types of markets. That doesn't mean that we want to take away from either the traditional markets, or we want to take away from AMMs on-chain or from centralized exchanges. It's basically allowing traders to engage in a different type of market, in the type of market that is always open, that is always running, that also is allowing users to swap at the real exchange rate. And I think with this intro, that was actually the perfect segue to explain a bit why Mento is different from what already exists on-chain, for example. So on-chain, typically markets are AMMs or some version of an AMM. In an AMM, the price of the two assets that are traded in this market is determined by the two pools and the relationship of the amount of assets in these two pools relative to each other. So these markets, AMMs, are great for finding a good price of an asset on-chain. They are great to find out what is the actual on-chain price of ETH or of Bitcoin or whatever. And these markets are great for that because they're permissionless, they're always on, they're accessible, and so on. But the problem is these markets are not great at mirroring off-chain real-world prices. So the price in the euro to dollar market or in the pound to Japanese yen market is currently determined off-chain. It's determined in the interbanking market. It's determined at the Forex desks in London and so on. So in the end, what we do is basically we're querying these off-chain prices with a very wide range of different oracles and different oracle providers. So basically we use Chainlink and Redstone, and we're working on integrating also Pyth and other basically oracle providers that allow us to query the prices. And then at every oracle update, we allow users to swap from a dollar to a euro at the euro-dollar price.
Just to ask you, like, to intersect there, because maybe just make it relatable for our audience, right? Am I correct to see it then essentially it's somewhat like a UI of a DEX where you can swap? But then if that's the case as well, if like the underlying mechanism, does it allow for arbitrage?
And actually, it's perfect for arbitrageurs. So you could imagine Mento also as an FX DEX. So of course, we have these 15 currencies that I mentioned that are already live, the euro, dollar, the Kenyan shilling, and so on. But in this FX DEX, we can also integrate other stablecoins. Of course, we already have, of course, integrated USDT and USDC because they're the two biggest ones in the room. And users want to use them for trading as well. So basically, at every Oracle update, you allow users to swap at the FX exchange rate. Oracles by now have become really high performant. So often the Oracle update comes every second. So every second you can trade at the FX price. In between these seconds, briefly, basically this type of market falls back to an AMM mechanism so that arbitrageurs cannot deplete these pools. But every second, basically, this becomes super efficient because you can trade at the FX price. And that actually brought in a bunch of, or many arbitrageurs that are already starting to arbitrage between our markets because they have a great price to AMM markets. So, for example, on Uniswap and so on. On Uniswap, there's, for example, a Bitcoin to Euro stablecoin pool. Every time when there's either a lot of demand for Bitcoin or there's a lot of demand for Euro in that pool, basically this market becomes in some way imbalanced, the price is adjusted. And it could be, if you then compare the Bitcoin to Euro price off-chain, that maybe it's not the right Euro price that is represented in this AMM. So arbitrageurs can then actually go to our FPMM, we call them FPMMs, fixed price market makers, and then source Euro, for example, there, and then go to the AMM and sell Euro there. And the same is actually true if you're a market maker and you don't have direct access to an FX desk. Maybe you make the market in JPY to Bitcoin, or you make the market in British pound to ETH, or something like that. Maybe you have to manage then your currency exposure, because depending on if Bitcoin is going up or down, maybe you have too much JPY or too little JPY. So you want to manage your currency exposure, and you should be able to do this on chain at the right FX rate.
So coming back to the stablecoin itself, you mentioned a Kenyan shilling stablecoin.
Yes.
Is it a couple of questions? Is it licensed? How do you maintain the peg? What's the underlying mechanism there?
Yes. So in the end, all of these stablecoins, you could call them virtual stablecoins and so on. It's like in the current Mento version 2, basically these stablecoins are over-collateralized by a on-chain portfolio of assets, mostly USDT, USDC, and other assets, because there's actually not enough on-chain collateral directly quoted in Kenyan shilling. So we have to over-collateralize to make up for the FX risk of the collateral. And we have to have proper collateral, including then, for example, USDT, USDC, and so on. In Philippines, for example, with the Philippine peso, there's already tokenized government bonds existing. So we can actually add tokenized government bonds that are then also in local currency, of course, to that on-chain collateral. However, the requirement is it has to be on-chain collateral so that it's verifiable for every user to see all the collateral is there. It's actually over-collateralizing and so on. Now, in the next version of Mento, we're actually adding CDPs, upgraded collateralized debt positions, where we use, for example, a part of Liquidity V2 or V3. I think it's V2, the latest version of Liquidity.
I believe it's V2, yeah.
Yes, latest version of Liquidity, that users then can also borrow local currency into existence. So you can imagine this as like a standard CDP, where a user could post dollar collateral and then borrow local currency assets against it. So you could post dollar stablecoin and borrow Kenyan shilling against it. And you could do this for different reasons. Maybe because you're bullish on the dollar, bearish on the Kenyan shilling, and you think the Kenyan shilling will further decline in value against the dollar. You can, by borrowing it, you're short.
Yeah.
So you can do that. And in these CDPs, now we are talking about currency CDPs. So actually the collateralization ratio doesn't need to be as high as basically in the case of more volatile assets than currencies.
So help me understand, going back to like the mechanism of the local, like a Kenyan shilling stablecoin. Yes. Essentially, what you're doing is normally, let's say there's a stablecoin, you deposit ETH, and that, you know, at a certain LTV ratio, you're able to, like, it's over collateralized. So, you know, I can mint, let's say, 50% of the value for a USDC denominated stablecoin, and then that peg is denominated in dollar.
Yes.
In this case, you're doing the exact same process with specific types of collateral. Let's say it's only USDC, but you mint a receipt token that's a stablecoin, but valued at the Kenyan FX against the dollar.
Yes, exactly.
And
with this, we then can create a bunch of different currencies into existence. But then this is only basically how are these currencies minted into existence. So now the next step is actually, and we call these expansion pools. The next step is actually then the distribution pools, which are even more important. We now can basically, using the Oracle price, create distribution pools where users can then trade the Kenyan shilling to the Ghanaian cedi or the Kenyan shilling
Forex
to the
trading.
euro. Forex trading, exactly. And this is basically, you have one type of pool, the CDP type of pools, where users basically create stablecoins into existence. And then you have these distribution pools where users then can do the Forex trading. Now, the nice thing where we think we can really scale this is in these distribution pools at the Forex trading level, we can also integrate other stablecoins. So if there is at some point a Colombian peso or a Kenyan shilling or any stablecoin that's simply better because, I don't know, maybe it has even better collateral, or maybe it has like the better on and off ramps in Kenya, it can also be integrated there to allow then users to also trade against this. And this is why I said in the beginning, you can imagine it a bit like an FX DEX, because the key part is then actually these distribution pools that allow users to trade at the FX rate. And then also for the platform revenue model shifts a bit, because as a stablecoin provider, typically your platform revenue model is you earn yield on collateral, and then you decide how much yield you want to forward to your users. And then maybe, I don't know, just taking any examples here, maybe Tether decides I'm not forwarding any yield, but my value as Tether is I have the broadest distribution, I have the best ramps and so on, and therefore people using me. That's great. But if you're a new dollar stablecoin and you want to enter this like super saturated dollar stablecoin market, probably you have to forward some yield, and maybe probably by now have to forward actually high amounts of yield. So that business model is probably tricky for stablecoin providers. It's maybe not so tricky for non-dollar stablecoins because there are not so many. But in our case, actually, the business model for the platform can be a bit more on the FX swap and basically the spread. It can be super low. It can be much lower than in Web 2. It can also be much lower and more price efficient than in any AMM. But there still can be a small spread for basically the platform revenue that then is like fully governable by the community.
And so a couple of questions. I think that the first would be, if you look at the Kenyan shilling stablecoin.
Yes.
I can understand the value proposition for Forex trades, because essentially I'm a Forex trader, but now I'm a Forex trader on an app. Let's not call it on chain, but it's in an environment where the markets don't close 24/7, have access. I feel like the Kenyan shilling is actually going to get valuated or appreciated or depreciated, whatever it is. I can deploy a strategy against it.
Yeah.
Very clear value proposition. When you talk about cross-border payment,
yes,
the biggest piece that's always missing is the off-chain component, i.e. the integration for on-ramp, off-ramp. Because a local, I actually don't know the currency in Ghana, but like in Kenya shilling, I can imagine if you have a local stablecoin on chain, the efficiency for on-ramp, off-ramp increases because I don't have to go through the dollar anymore.
Yeah, exactly.
But then you need those integrations.
You need those integrations, and in the end, the stablecoins that are integrated in Mento then also need those integrations. So how does it often work with cross-border payments today? I read somewhere on Twitter, if I hear stablecoin sandwich one more time, I punch someone in the face.
No one's getting punched in the face.
That is good. So a lot of the projects, what they're doing is actually they allow people to on-ramp into, let's say, USDC, and then they send USDC to the recipient country, and then they allow people to off-ramp into their local currency there. And then you have basically, you're going through a spread. If it's basically two non-dollar countries, you're going through a spread 2 times. Often, basically, the liquidity provider in that trade is then also maybe sourcing on AMMs the currency and hedging their currency exposure there. So it can be expensive. But of course, basically, that sending cross-border piece where you just send USDC, that is actually cheap. In our case, we can just be a bit cheaper than that because in our case, if someone comes with local currency and then they on-ramp into local currency, and then it will be converted at the FX rate, and then it will be off-ramped into local currency as well. But you need basically then still, if it's fiat to fiat, on-ramp and off-ramp at both sides.
But you have those integrations.
So we have many of those integrations in many countries. So for example, Mento is also integrated in, let's give one example, in MiniPay, the wallet by Opera. This wallet is basically, it launched in I think 5 or 6 countries across Africa. They went to 7 or 8 million users. Now they actually expand to more than 60 countries. So they do a really good job in basically rolling out in every country and then basically bringing on and off ramps on board. So we have, from that partner, a great advantage that basically we have then the integrations in all of these on and off ramps in all of these countries. So I think on and off ramps remain critical. But on the other hand, because we allow users to swap at the FX rate, you could still on-ramp into USDT, and then you could convert into the currency you want to have or into the currency of the country you want to send to. So for example, let's say you want to send to Europe. I think in the past, a lot of the use cases have been then that in Europe, people then just off-ramped from USDT, and then they have the spread. But if they want to stay in stablecoin, maybe they actually want to receive euro, because otherwise they would have an FX spread or FX risk. So there's a bunch of use cases there. There's then, I mean, you mentioned in the beginning the FX traders. There's even for purely on-chain FX traders, so basically I would say the DeFi, maybe not say degens, but basically who's already trading in DeFi. There's like really cool new tools that already basically jump into on-chain FX. There's, for example, this Carbon DeFi by Bancor. You can actually backtest FX trading strategies, and these FX trading strategies directly integrate Mento, and then you can say, maybe I want to backtest a mean reverting strategy between the Brazilian real and the Colombian peso. Mean reverting because there's high correlation between these two currencies on average, but sometimes it breaks out and I want to trade on that. So you can backtest it, you can simulate it, and then you can actually directly implement that trading strategy. But there's so many more use cases actually. Cross-border payments we mentioned, we can maybe be just a bit cheaper because we allow users to directly on-ramp in their local currency or off-ramp in their local currency, or actually in any currency they want. It's basically the user's choice. There's then, of course, also local payments, which always has been a very long game for the stablecoin industry. And it actually was a long game, again, because of missing FX infrastructure. If you want to accept payments in stablecoins, if we are here in Cannes, the merchants here in Cannes need to get euro, because if they would receive dollars, they would have an FX risk, and they don't want to take that. Another huge use case, which is maybe also interesting in some of the young economies and emerging markets, is microlending. So if you're an entrepreneur, maybe let's say again in Kenya or in Ghana or somewhere else, and you need a loan, maybe for you it's hard to access a bank loan. If the only on-chain alternative for you would be a USDT loan, it would be actually really hard for you, because if you're an entrepreneur and you have revenue in local currency, if your local currency loses value against the dollar, paying back that loan becomes more expensive for you. So if you would get a loan only in dollars, you would bear the FX risk. Also there, I think, again, there's need for FX infrastructure. So there's a lot of different use cases where I think just having proper FX infrastructure on chain is really, really important.
Yeah, I think Mento Labs is very unique. So I want to summarize where we're at and then follow up with the next question, which is essentially you guys issue stablecoins and virtual stablecoins, where essentially there are different pairs available on a DEX, like a DEX-like interface functionality that you guys also provide. And you also have distribution pools, which basically has different FX pairs against each other. So it allows for trading, instead of going through the dollar, directly FX to FX, i.e. Ghana to Kenya. If I haven't got it wrong in the meanwhile, please correct me. But
perfect.
And then my next question is, to throw a buzzword in there, is the fragmentation of liquidity. So how does that hit Mento Labs in this case?
Yes. And I think this is, I would say, the common story. It was also the common story here at Stable Summit in the past 2 days. In the end, liquidity is still a huge thing on-chain. We need, for every new stablecoin that comes to find life, we need to find liquidity, otherwise they're not really usable. And liquidity has two elements to it. It's basically trading the right amount of assets at the right price. At the wrong price, many assets can be liquid. If I sell you an apartment here in Cannes for $8,
I'll buy it
immediately. So that apartment becomes very liquid in that moment. But at the right price, maybe we need a bit more time to do that trade. So I think that at the right price element is something we are directly solving for, that we allow users to trade at the FX rate directly makes stablecoins more liquid, because we are offering a better price. So you see already a bunch of ecosystems out there where there are the first local currency stablecoins live. And what we so far see actually is there's very low adoption on many of those. And the reason for that is actually, again, the liquidity reason, because you cannot access them at the right price. And if you're a Forex trader, then you need to access them at the right price. Otherwise, you won't come on chain. Then you stay off chain. So actually, point number one to liquidity, by offering the right price, by offering the right type of markets, we're bringing much more liquidity on chain with basically new types of traders coming on chain that then can actually engage in on-chain FX. So that is...
To interject, and that's what you mentioned before, where you said because of the architecture and how you do basically consolidate the feed from different oracles, you're able to provide the right price.
Yes, exactly. And then that is one important part. And then on the other part of liquidity, basically the right amount next to the right price, you could imagine Mento as like a kind of concentrated liquidity pooling, that there's basically this CDP setup which allows you to borrow stablecoin supply into existence. And then there are these distribution pools that allow you to trade at the right price again. So it's basically one side is more for basically providing the right liquidity, and the other side is then distributing that liquidity at the right price. These are the two elements. Of course, in the end, with Mento, we are a relatively young protocol. We now, when we go cross-chain, we need support from the community. We need support from also the foundations that are interested in getting FX infrastructure that like these initial pools are seeing the right liquidity. So in the end, basically, we need all of this. And of course, as always in Web3, you can think about, like, even in the beginning, incentivizing parts of that and so on. And all of this, of course, has to happen. But there's already like a small fix to the liquidity problem is by providing better prices.
Yeah, I can see how providing better price also attracts liquidity. But if I understand it correctly, considering Mento Labs starting out, that is something that would need to grow as well. Because yes, I can imagine at the end of the day, you need LP providers.
Totally. And that needs to grow. And currently on an annualized level, and of course this, again, it's a young protocol, so sometimes that changes. But currently on an annualized level, we're doing around 18 billion in trading volume.
Wow.
So there is already quite some trading volume happening. This currently is all on Celo. We really expect that once we go multi-chain, that this grows significantly. Because I, again, assume that there's basically a need for FX trading on every other network out there as well. So in the end, for us, the targets for this cross-chain expansion then are the high-performant networks, because in the end, I'm really excited about this end user in Kenya that all of a sudden either has access to a proper, fairly priced loan, or that business in Kenya that can exchange at the FX rate with a business in Ghana. I'm really excited about these use cases. But we also know we need the trading use cases so that actually
they all feed each other.
Yes, exactly. That they have the right liquidity. And therefore, I think this, in terms of our growth now, is in some way now the right sequence that we first have to actually now bring to these trading ecosystems that have like high performance chains at low prices. We need to bring basically the FX traders there, and need to offer also interesting trading opportunities to the DeFi traders. Because in DeFi, everyone wants to trade on something, and people probably also want to trade on FX.
Yeah,
it's a huge market. So these are probably the ones that we need for basically also being able to support all of these other use cases at scale.
Yeah, we're nearing the end, but a wink when you need to go, because you definitely. I think this is fascinating. Also, because personally, I'm also very much motivated. I was born and raised in the Netherlands, but where my parents are from, go South Caribbeans and different parts. Very much a lot of unbanked people. When it comes to infrastructure, baseline infrastructure, it resonates with me a lot. I think with a lot of people. It doesn't surprise me you come from the Celo ecosystem, phenomenal people there who have always been working to make an impact.
Great.
At Scroll, I went there, Nigeria and Kenya. You guys are building a legacy. Very much, I think it's amazing.
Amazing.
I think the question I would have is maybe I was almost being the advocate of the devil here. Obviously I have a hat on with Scroll.
Yes.
But does it actually benefit Mento Labs to go multi-chain?
I think in the end, especially for FX trading, this will be a multi-chain thing. In the end, often probably the FX traders don't have less views on, for example, Celo or on whatever chains they are on as people in the in the community. They are, of course, also less loyal to an ecosystem than people in the community. And therefore, I think, since I think about Mento as a infrastructure plumbing type of necessity for every ecosystem, I think it has to be multi-chain, because there is a need for FX and currencies on every network. And so we are currently probably one of the few or only one that are building really with only that FX infra focus. So yeah, I think we should do that, and should be multi-chain. But of course, working in a Celo ecosystem for the past 7 years, I agree with you. It's a great community, and especially a great and wonderful and creative and growing community in many of these markets that we today used as examples for where this is actually needed also for small businesses and so on.
I think you did a phenomenal job explaining. We just before this session, we were like, oh, would it be understood? At least I wouldn't classify myself. I think I classify as retail. I think you did a phenomenal job explaining this. I'm actually curious on your roadmap of Mento Labs. So it's for me very, very clear, almost like, okay, cool. The problem that you're solving, the value proposition, which is very refreshing. You don't hear that often in crypto. And I think that's a very clear target market that I love you're going after. What's next for Mento Labs?
So first of all, thanks. I think I was only enabled to do that by you because I was in that conversation, had someone who has really deep understanding of all of this and therefore could ask the right questions. So I enjoyed our conversation also a lot. And then second of all, yes, the roadmap, critical piece. I think there are two things that are exciting and upcoming. And one part is basically the cross-chain, or three things. Cross-chain rollout. So basically now we relatively soon will announce like the first key ecosystems that we want to roll out, so the community can follow Mento and see where the first ones is we are building for. Then the second piece is there will be, and we already have this live on testnet, this Mento V3 version 3, where you can borrow local currencies into existence. Basically, that's CDPs set up for basically the liquidity problem next to these AMMs, the fixed price market makers. That is the second thing that is now being rolled out. And here, the first thing on the roadmap is you will see an updated white paper on that online, and it's already live on testnet. So I think that will be rolled out relatively soon as well. And then a core piece of that is also all of this is decentralized. All of this is not controlled in any way by us, but it's actually governed by the Mento token. So there will be a TGE. I think I almost feel bad when I'm now in this industry say that because it always feels weird. But I think for a product like this that basically should live across many different ecosystems in many different countries with many different communities, there needs to be basically some decentralized governance to it. And maybe people really want to engage with it and benefit from it and grow with it and basically want to have a say in what we will do with with platform revenue. I mean, I told you we're already doing some billions in transactions. So when we grow this, then of course also platform revenue grows significantly. So there's really exciting things. We also want to grow the community, the core team, and everything around that as well.
Well, Markus, I wish you all the best. I'm pretty sure you're going to be a massive success. Thank you so much. Actually, you know what? And I'll say it on record, we need to have you back. The next session
Always.
To see what the progression is, so we can see the great products that you guys are building, and honestly, the value that you're driving towards people where it will make a difference. So very excited, and thank you so much for joining me.
Amazing. Thank you so much. This was an amazing conversation. I really enjoyed it. You're doing a great job. So yeah, thanks so much for having me. Really an honor to talk to you. Thanks. And I will be back to talk more about that for sure.
Amazing.
Cool.